2017. The Bank of England's error may drag Governor Carney into the public debate. The central bank also works on contingency plans to the Scottish independence. We talked about that. And the risk assessment statement, we don't want to get into that, but here's some of the numbers. Britain sends almost half of the exports of goods and services to the EU. £227 billion, that's $351 billion last year, and foreign companies operate in the UA gain tariff-free access to markets of 50 million people in 28 countries. Concerns surrounds the vote could dampen business investment. A majority of economists said in a Bloomberg survey published on Friday. Cameron said he's confident he can reach a deal on EU reform. These talks with other members of states will require patience and tenacity, he said. He told reporters at a summit in the Latvian capital of Riga. Now, this goes on for the EU. Let's go to some of the PMIs. We'll get those out of the way and we'll summarize them briefly. We'll start with the HSBC flash China PMI. It was at 49.1 in May, 48.9 in April. The HSBC flash China Publishing Index is published monthly basis ahead of the final one, making the HSBC PMI operating condition in China. The estimate is typically based on 85 to 90 of the total survey. The May final PMI will be released on June the 1st. Output decreased from no change. New orders decreased slow rate. Export orders decreased from increase. Employment decreased slow rate there. And this is some comments here from Annabelle Fiddles, that's an economist at Market. The China Flash PMI points to a further deterioration in operating conditions in May, with production declining for the first time in 2015 so far. However, soft client demand, both at home and abroad, along with further job cuts, indicate that the sector may find it difficult to expand, at least in the near term, as companies temper financial plans in line with weak demand. On the positive side, deflationary pressures remain relatively strong, with both input and output prices continuing to decline, leaving plenty of scope for the authorities to implement further stimulus measure if required. And this is their situation. And we already gave the numbers of there, and HSBC is one of the largest financial concerns. We'll move from them to the next PMI as we move across the PMIs. We did that. Let's jump over here to Germany very quickly here. And the key points here: German flash composite output index 52.8. It was 54.8 in April, a 5-month low. Flash service activity index at 52.9, a 5-month low there. You can see where this is going. The flash manufacturing PMI at 51.4. and the manufacturing output index at 52. The summary here: May's data signaled a further slowing in private sector output growth in Germany, as highlighted by the seasonal adjusted market flash German composite output index falling from April's 54.1 to 2.8. Despite still signaling an expansion, the rate of growth was weakened in the weakest in 2015 so far. Both manufacturing service providers reported slower activity, which some panel members attributed to relatively weak demand and rising cost pressures. Mirroring the trend of output, German private sector companies also signaled a weaker rise in new business, while a pickup in construction activity, raising domestic demand were reasons behind the overall increase. Some survey participants likened the slower rate there to economic uncertainties. Meanwhile, manufacturers reported a fourth consecutive month rise in new exports being very important to the Hands economy, which the Germans are. However, the latest expansion was the least marked in 3 months and only marginal overall. The latest survey data signals a continual private sector employment growth in Germany, with the rate of job creation accelerating slightly since May. According to sector data, the service providers increased their workforce numbers at a stronger rate than manufacturers. Private sector backlogs in Germany fell for the second month running in May, signaling some spare capacity in the sector. The rate at which work outstanding fell was the most marked in 2015. So far, some survey respondents link this to weak new order growth and higher employment levels. Input costs faced by German private sector companies increased for the third month running. The rate of inflation accelerated further and was the strongest in just over 2.5 years. Anecdotal evidence attributes the higher costs to exchange rate factors, rising oil prices, and increased staffing costs. With input prices rising at a sharper rate, companies raised their charges in May, sort of a chain reaction there. The rate of output price inflation was in fact the highest since January of 2014. The increase was largely driven by higher changes at service providers. At factory gate, prices at manufacturers rose only fractionally. German manufacturers were cautious about their stock prices in May, with both pre- and post-production inventories falling since the previous month. Needlessly, companies increased their buying activity slightly. The service sector remained optimistic that business activity at their units will increase over the next 12 months. The level of positive sentiment dropped, however, to a 5-month low, with some panelists concerned about new tenant and landlord regulations, which are generic to Germany. And we move on from Germany, I believe, to Japan, and we'll finish this off with the EU and back to the U.S. The flash, the market flash PMI in Japan at 50.9. It was 49.9 in April. Operating conditions improved slightly in May. The manufacturing output index at 51.7. It was 49.3 there. Today we see the latest release published on, well, we won't worry about that. This is from Amy Brownbill, an economist there, which said reflective of the overall improvement in operating conditions in Japan. Manufacture was returned to growth both in production and new orders in April. Much more rosy picture in Japan than in Germany. Long-term, the rates of expansion were faster than their respective long-term averages. Consequently, employment rates at the rose, at the quickest rate since December last year, while buying activity increased for the third time this year. Ecnomics seems to be working. Meanwhile, input prices increased at the weakest rate in the current 29-month cycle of inflation, while charges stabilized following a 3-month period of decline. And let me just, okay. We were trying, okay. Employment exports here. We've taken care of Japan. Bonsai. Let's go to the EU, and then we'll pop back. This is the EU PMI, Eurozone, I'm sorry. Job creation at a 4-year high despite slow pace of economic growth. The flash PMI composite output index at 53.4. It was 53.9 in April. Flash Eurozone Service PMI Activity Index at 53.3 was 54.1 in April, 4-month low. The Manufacturing PMI at 52.3, it was 52 in April. And the Manufacturing PMI Output Index at 53.5, it was 54 there. And let's get to a little bit of their commentary. Eurozone economy lost growth momentum in the second consecutive month in May, it's according to the PMI. However, the survey also shows that the rate of expansion remains sufficiently robust to encourage firms to take on extra staff at the fastest pace in 4 years. Price indicates, meanwhile, that the 3-year highs, according to signs that deflationary pressures are receding. The market Eurozone PMI registered 53.4 in May, according to the flash reading based around 85% of usual monthly survey replies, down from 53.9 in April, and a recent peak of 54 back in March. Faster growth in manufacturing was offset by a slowdown in services, though the pace in the latter merely eased slightly from March's 8-month high to suggest a broad-based upturn remains in place. The survey suggests, however, that growth could continue to soften in June. Growth of new business inflows moderated for the second month, running to register smallest monthly gains. February's weak order book growth was centered on these service sector, with manufacturing reporting a strong inflows of orders. To improve export performance, expectations of further growth in the service sector, meanwhile, slipped, dropping to a 5-month low. Backlogs of work fell by only marginally for the first time since January. The region outside the core countries of Germany and France once again led the upturn, although the rate of expansion slowed. The regions excluding France and Germany is, of course, on course for a better quarter of growth in jobs there. This is from Dr. Chris Williamson. The Eurozone recovery lost some of its vigor in May, with her growth slowing slightly from the second consecutive month. At the moment, the extent of slowing is not a major concern, but will no doubt be causing some nail-biting at the EBC as policymakers await signs that quantitative easing is the panacea the region needs to achieve robust and sustainable recovery. The average PMI reading for the second quarter so far points to GDP growth similar to the 0.4% expansion seen in the first 3 months of the year. That suggests that the region is on course 2%. That's the magic number here. This will be the best performance since 2010, in other words, within 5 years. However, we need to see a reversal of current business slow down there. New business growth also needs to